Okay. Boris, do you want to give us your first trade for today as well?
Yeah, I actually have a lot of trades already on. While Andrew was flapping his gums, I already put trades on.
Here we go.
You must be the youngest of the old guys on the program.
I am, immaturity is the key to youth. So, I have always stayed 12 years old. That's always been my great strength mentally.
Okay.
All right. So I do something very, very non-traditional, or at least something, hopefully I think maybe unique to a lot of people who are watching this. I break every single rule that they teach you in trading, but in a very methodical manner. So there's two ways to trade. There is the lottery ticket approach, which is how Andrew and I think, standard way of trading, which is, you risk one, you try to make two, right? Or there's the insurance company approach, which is where you risk 50 cents. So, excuse me, where you try to make 50 cents and you risk $1. You risk one, you make one to try to make two. You have reverse risk. I mean, I actually go much, much harder than that. If you think about how insurance companies operate, you can buy a life insurance policy for £1,000 or $1,000, and they pay out $1 million. That's 100-to-1 risk against, right? 100-to-1 risk against. And the insurance companies, yet there's no business that makes more money than they do. And that's effectively what we try and do, because what they do is they know the probabilities are very much in their favor. So the method that I use on an intraday scalping is we sell the highs, we buy the lows. So number one, we are already on the opposite side of what everybody else is doing. We're essentially with the bank dealers and the market makers and the floor traders, in the olden days, who are always on the opposite side of what the crowd is doing. So I'm happy to facilitate liquidity. Secondly, we have tight targets and stops. So in FX, I have a short dollar-yen trade because it's a day's highs, and a long euro dollar trade because it's a day's lows. 10 pip stop, 5 pip target. I get stopped out, I couldn't care less, because I'm going to go once I get stopped out, I wait for them to make fresh highs and fail at those fresh highs, and I will go to 3 times the size and reestablish my trade. The way we trade is that we will give ourselves 4, not 1, not 2, not 3, but 4 opportunities to win within a trade cycle. We very much use stops. We very much use small targets, but we do not quit on trades. So you're going to see me getting stopped out, going right back in, getting stopped out, going right back in. I couldn't care less, because probability-wise and the way the strategy works, we resolve hopefully 98 to 99% of our trade cycles, and that is how we make money. So for right now, I took a short dollar-yen trade. That's obviously crawling against me. I took a long euro dollar trade. That's just static over there. I don't have anything else. Everything else is mid-range on the currencies, so it's a little bit boring. On the commodities, everything is mid-range as well. As you can, oil is just mid-range. I could press myself to try to sell oil here, and maybe I'll do that just for fun. This is not really my kind of a trade, but I'll since we got to lay trades down, maybe I'll lay down the oil trade. Oh, sorry. And as I was just talking about, so I must have gotten stopped out on my dollar yen. So let's go. This is a great example. I got stopped out on my dollar yen. We're making fresh highs. I'm going to wait now. I'm going to wait now for this candle to fail. I got 9 seconds. If I get a red candle, meaning it's a fail at the highs, I'm going to go right back in at three times my size. The very, very important aspect of my trading style is that I start with very small sizes. So now I'm going to get short again. What happened to my dollar yen here trade? Yeah, okay. I'm short dollar yen now. 5 pip target, 10 pip stop. If that 5 pip target gets done, my prior loss is going to get wiped out, and I'm going to be in profit overall in the position. Now, the other thing I had, which was really not a legit. Oh, that trade worked. Sorry. I had a trade where I was short Nasdaq, 10-point stop, 5-point target, and you can see that trade worked right now. So I didn't even get a chance to tell you about that trade. Now, Nasdaq and the indices, let's go look at them for a second. Nasdaq and the indices are also mid-range. I'm not at days highs, days lows. The great trades for me were to buy over here, to buy over there. So now I have to kind of just be a little patient. Hopefully in the next couple of minutes, Nasdaq is going to crawl back down to the lows, and then print a green candle, and I'm going to get long. If it doesn't, maybe I'll just go long here on a bounce. If you think about my trade strategy, is basically called the bounce, and that's really what we do. We bounce off the bottoms, bounce off the tops. So
Just
that's where we're at.
Okay, fascinating insight to the way that you do things, and I think I learn as much here as most other people that are watching today. How many trades would you take a day, Boris?
About 20 trade cycles, right? 20 trade cycles. So each sometimes a cycle can go to three level trades. So effectively, that could be as many as 60 trades maximally. So the primary instruments would be US 30, NASDAQ, oil, gold, Bitcoin, Ethereum, which are both also kind of very quiet today. You can see where's Bitcoin, Ethereum. Here's BitEth. They're literally dead. They're mid-range. Now, The thing that I really like about my strategy is, we talked about making stupid trades or getting, doing trades that are just random because we're bored. Because I have a very hard rule, I don't engage until I get to the highs or the lows of the day. It keeps me out of this stuff. I don't try to guess. I have no idea where ETH is going to go. I have no idea where BIT is going to go. And I don't try to guess, So that makes it, my strategy forces me to sit on my hands when I don't have a setup.